The budget and the monetary policy are behind us, but more imminent is the global macros, which are turning towards greater and greater tightening. What are India's growth prospects in the year ahead? We're joined by Chetan Ahya, the chief Asia Economist at Morgan Stanley. Chetan, thank you very much indeed for joining us. Before we come to Asia, China and India, just a word on the global macros, because now there are fears that there will be two hikes from the Fed, March and May perhaps. Your assessment of how bad the tightening of the global financial conditions could be and therefore growth prospects?
So, Lata, we think that markets were pricing in one more rate hike from the Fed before the last a few days, and now markets are pricing in about two more rate hikes from the Fed. We have also raised our forecast, and we also think the Fed will actually take up two more rate hikes. And in terms of the implications of this on the financial conditions, look, I mean, generally for Asia, the currency movements tend to be dependent on what is happening to the Fed policy, but also at the same time, the markets are focused on growth differentials. And to the extent to which our view is that growth in Asia is going to be relatively strong and growth differentials between Asia and US will continue to widen going forward, we think that broadly the financial conditions should be relatively stable going forward.
Relatively stable. Are you saying that, I mean, what's your, the Morgan Stanley assessment of global growth and US growth and Asia growth this year itself? The jobs data seems to indicate that the US economy is still chugging along fine, but greater tightening and going on to 5.25 or 5.5 on the US Fed funds rate could mean a very bad second half. Are you estimating serious crimping of global growth in the second half?
Where we are expecting growth to remain soft in DMs and in the US, but we are not in the camp of seeing a recession. In fact, the market pricing has moved ahead and expecting that the Fed will do more on the basis of strong jobs data. So it means that now you have reduced the probability of recession, and people are now beginning to believe that there will be a possibility that the US will be achieving soft landing, which was incidentally our base case already.
Okay, so you're not really rattled by the extra rate hike that you and others are factoring in. Let me come to the Asian theatre itself. Is this likely to be, therefore, a very good growth year for Asia, simply because I think Morgan Stanley is extremely bullish on China?
Yeah, that's right, Lata. So, we are expecting China to really drive region's growth rates. And so we're expecting that, region will achieve, on an average, by the time we are in the fourth quarter, GDP growth will be clocking around 6% year on year. And in the backdrop, what we're expecting for DM is just about 50 basis points. Even if you think that there's some upside risk out of the strong job data, it would still be at least about 500 basis point differential in growth for Asia versus US and Asia versus DM. And that's essentially being driven by China. And China's recovery, we think, is, there is a question mark on how sustained the recovery will be, especially for the consumer spending. But we are quite confident that China's consumption spending will recover because you are now seeing job recovery, and the consumers are sitting over an excess savings stock of about 7% of GDP. So both these factors will ensure that China's growth is sustained into the second half of this year.
Okay. One of the intriguing aspects of the Reserve Bank's monetary policy on February 8th was that the inflation forecast seemed to be ahead of what the street was telling us. They have a 5% for the quarter coming, that is April, May, June. Most people expect it to be south of that. And they go to the end of the year to 5.6, not the expectation in the street. Are they worried about inflation that China might spark? The Chinese growth, can it mean more expensive oil and more expensive everything?
So, look, I think China's growth recovery in terms of its implication for the rest of the world can be grouped into two factors. Number one is what happens to oil and non-oil commodities. And number two, what happens to goods prices excluding commodities. Now, as far as oil and non-oil commodities are concerned, our view is that there will be modest upside to that, but not as much as you would have typically seen in the past recovery cycles of China, because bulk of growth recovery in China is expected to come out of consumption rather than investment. And the property sector is still likely to be a drag in this cycle for China. Now, the bigger story is our view is in the goods segment other than commodities. So, in the first half of 2022, we had seen a big rise in goods prices globally. And that seems to be now coming off. If you look at China's non-commodity PPI, it's gone into deflation. And that's weighing on China's export prices and therefore global goods prices, excluding commodities. So I think net, we don't see much of an inflationary pressure emerging out of China's recovery.
Okay. So with that, let me, having set the global environment, how do you analyze RBI's forecast of inflation? Are you also fearing that the average next year can be 5.3, which means we are a distance away from the target of 4%? What are you expecting by way of policy as well?
So, Lata, we do think that inflation in India will remain in the range of 5.5%. And there is some base effect. So, in the month of March, April, May, you will see it decelerate a lot more and then stay back in that range of 5 to 5.5%. And that's been our view all the time, for some time rather. And we don't see a need to change that at this point of time. In terms of the implications on the RBI's policy, look, I think it depends on how keen is RBI to get to 4% inflation in the shortest possible time. From our understanding of RBI's statement is that it probably is going to be patient and guide towards 4% medium-term path, but not necessarily aim to achieve that in the next financial year. And so therefore, they can sort of maintain an average real interest rates of about 100 to 125 basis points. If inflation is going to be between 5.5%, and RBI stops rate hikes at 6.5%, you will have that 100 to 125 basis points of positive real interest rates, which is what RBI has earlier indicated is some kind of a neutral estimate for them.
So would you pencil in one more rate hike?
Yeah, so we have one more rate hike from the RBI. So, we actually are saying that right now RBI has peaked. We see that there's a risk that RBI could do one more. But in our base case, we think that they are done at 6.5.
Okay. Yeah, at 6.75, they will have a comfortable, perhaps 1.3 over 5.6, if indeed that's what inflation goes to. Chetan, what about growth? That 6.4% that RBI forecast had a lot of people raising their eyebrows. The average I got on the street when I did a poll before the policy was 5.8 to 6%. Your thoughts?
We are at 6.2. Again, on that, we have been at that number for some time. And with the strength in the data that we are seeing in the month of January, we think that this number is still pretty much achievable. There was a concern with some slowdown in the month of October and November, but we were always of the view that there's nothing in terms of the framework when you think about the outlook should cause a meaningful slowdown in India. And January data is confirming that we are going to get back on that path and on track to achieve 6.2% GDP growth.
6.2%. Okay, so the Reserve Bank would still be an outlier with 6.4. By the way, you are at the upper end of the market forecasts. We have even people with 5.5 and actually one reading of 5.1, which I didn't include in the average because it was outside my bell curve. But, coming back...
We are more constructive than a lot of people who are talking about recession in the U.S. As far as China is concerned, again, we are at the upper end of the consensus forecast. So it sort of follows through from that generally we are more constructive on global growth than the consensus. Okay.
Well, more strength to you. We do hope it is a year of growth after 2 or 3 dreary years that we've seen. But Chetan, one aspect of Asia doesn't get discussed enough. So let me put that to you since you are the Asia specialist. Japan. We saw Japan, the BOJ, announce that it is raising the cap on the 10-year by 0.5%, 2.5. So, 0.5. That kind of gave the feeling that Japan would also be one of those central banks which at long last will raise rates. Do you expect that? And what will that do to the rate, to the currencies in the region?
So for Japan, Lata, there are two policies that they're in debate right now. One is the control on yield curve, and second is the base policy rates. Now, our view is that BOJ will remove yield curve control or expand the range further by the summer of this year. And as far as the policy rates are concerned, we don't think they will hike policy rates in 2023. In general, the market pricing is quite high. So, for example, for the 10-year bond yield, the forwards are pricing in something like 83, 84 basis points versus actual of 50 basis points. And as far as policy rates are concerned, markets are at about 10, 13 basis points. So markets are pricing in 10 basis points of rate hikes from minus 10 basis that we are currently. But we think that market pricing is more hawkish than the outcome that we are forecasting. We think that Japan's inflation problem is very much cost push driven. So in fact, core inflation is still at about 1.5%, not anywhere close to their 2% target. And more importantly, if you want to see a sustained inflation trend in the country, then you need to see wage growth at 3%. But current wage growth is running at 1.1%, and we don't expect it to rise above 1.5%. So, they're not likely to achieve that 2% sustainable inflation goal, and therefore we think that the central bank will not really be as hawkish as what the market is pricing it.
Okay, I'm warned, I'm out of time, but let me squeeze a very quick view on the rupee. Do you see it appreciating towards the year end, or are we in this 82, 84?
So we do think that the dollar weakens, and therefore by the year end, we are expecting a rise in all the Asian currencies. We do think that in the near term, with the news flow that you're getting in the US, dollar will sort of pause its rally. But by the year end, we are still maintaining that appreciation forecast for the rupee.
All right. We'll leave it at that. Chetan, thank you for that many splendid interview. Learned a lot about the Asian world, Asian macros, as well as global macros. Thank you very much for joining us. Wrap up on Bazaar. Chartbusters up next.